Is the big tech secretly abandoning Nvidia chips? Look, if you've been following the tech market lately, it feels like everybody is talking about just one company, Nvidia. Every headline says the exact same thing. Jensen Huang sells another batch of chips. Nvidia made tens of billions of stock market profit, and the stock goes up. And honestly, it makes sense why people think Nvidia has completely won the AI game. So, is Nvidia the company that's powering the AI revolution? What are you looking at here is one of the most extraordinary growth stories in the modern business history. Nvidia didn't invent ChatGPT. It didn't launch the first AI model. It didn't create the AI revolution. But it built the infrastructure that made the AI revolution possible. And then the numbers on the screen show just how dramatically that decision paid off. Let's look at the revenue line. That's the one in the green. Back in 2022, Nvidia generated roughly 27 billion in revenue, a great company by any standard. Then look what happens in 23. It's essentially flat, almost no growth. At this point, nobody is looking at the chart would have predicted what's about to happen. Now watch the AI inflection point highlighted on the graph. Between 23 and 24, revenue jumps 126%. Not 12, not 26, 126% in a single year. And then it does it again. 25, it grows another 114, and 26, it grows 65%. Even after becoming one of the largest technologies companies in the world, revenue reaches almost 216 billion. That's roughly 8x increase in just 4 fiscal years. Now let's look at the profit story in blue. This is where the story becomes extraordinary. Most companies can grow revenue. Very few can grow profit like this. Now, in 2022, it's approximately 9.8 billion net income. In 23, it actually declines. Profit falls by more than 55%. I think this is when the US government barred Nvidia from exporting high-end chips to China. If you were watching the company back then, it looked like growth was slowing. But then AI arrives. I mean, looking at this company back then, what a good buy it was. Look at it at 24, profit jumps 6 times in a single year. This is one of the most dramatic profit expansions you will ever see on a public company chart. And then profit grows another 145% in 25, another 65% in 26. The result, net income surges roughly 9.8 billion to more than 120 billions. That's roughly 12 times larger than what it was just 4 years earlier. And if you look at the stock price performance, what a growth it has been in the stock price performance. In 22, stock falls less, to about 50%. Market thinks the growth story is over, and then suddenly AI arrives, everything changes. 239% stock rise in 2023, 171% in 24, another 40% in 25. Today, the stock trades dramatically higher than it did before the AI boom. Why? Because investors realized Nvidia wasn't just selling chips, it was selling the computing power required to build AI. The big takeaway? This is the most important lesson that I learned from this page. The story wasn't about chips, it was about positioning. Years before ChatGPT existed, Nvidia invested heavily in GPUs, software, CUDA, and the AI infrastructure. Most people didn't notice. Wall Street barely cared. Then the world suddenly needed enormous amount of GPU power, and Nvidia was already standing exactly where the demand showed up. That's why the numbers on this page look almost unbelievable. Nvidia didn't just participate in the AI revolution, it became the company which powered it. And so looking at these growth curves, it's easy to see why investors believe the story may still be in the early chapters. But we have a similar story being played out right now. And I just want you to pay close attention to it. Now, before I talk about this new story which is being played out right now, I want you to make a note of this fact. Companies like Google, Meta, Microsoft, OpenAI are spending insane amounts of money on NVIDIA's chips. But here's the problem. NVIDIA profit margins are around 75%. That means for every $1 billion these companies spend, a massive chunk goes to the NVIDIA's bottom line. People literally call this the NVIDIA tax. And the big tech is tired of paying it. So instead of relying 100% of NVIDIA chips, they are quietly building their own custom AI chips. Look at Google.
The Tensor Processing Unit, our first custom AI chip, enabling incredible performance, scale, and workload flexibility. Now, for the demands of training the latest reasoning models and running massive inference at scale. Ironwood, our most powerful TPU. It's purpose-built with over 9,000 chips per pod, over 4x the peak compute power, and 6x the high bandwidth memory capacity to address all your model scales.
In the big tech, Amazon offers Trainium chips for model training. Microsoft has its own Azure Maya AI accelerator. Meta has developed MTIA, Meta Training Inference Accelerator. OpenAI has Jalapeno. Let me show you the other example from Microsoft.
Today we're announcing Maya 200, which is our new AI silicon specifically optimized for inferencing very large models, including both reasoning as well as chain of thought based models. It provides 10 petaflops of compute capability with tremendous amounts of HBM so that we can specifically run these large language models very close to the compute and with specific optimizations for both FP8 but also FP4 based instruction sets. And that ultimately yields tremendous performance capabilities as well as cost efficiency. In fact, Maya is 30% cheaper than any other AI silicon on the market today.
Now, to understand what's happening, we first need to realize that AI actually has two completely different jobs. On the left side, we have training. This is where companies teach AI models how to think. Whether it's ChatGPT, Gemini, Claude, or Llama, the model has to process enormous amounts of data and learn patterns. For that job, NVIDIA's GPUs are incredible. Think of them as supercars. They're extremely powerful, incredibly flexible, and capable of handling almost anything you throw at them. But once the model has been trained, the challenge changes completely. Now you're serving millions and eventually billions of users every single day. That's where custom chips come in. Instead of using your supercar, you want an efficient commute car. You don't need maximum horsepower anymore. You need something that's cheaper to operate, use less power, and built for a specific task. And that's the key idea. Training AI requires flexibility and raw power. Running AI requires efficiency at scale. Now let's look at what happens when AI actually reaches consumers. Imagine you launch a new AI product. At first, maybe you have one user, then 100, and then 1,000, and then 1,000,000. And before long, you're actually serving hundreds of millions of people around the world. That's when things get expensive. Every AI query requires compute. Every query consumes electricity. Every query uses hardware resources. And unlike training, which happens occasionally, inference happens constantly 24 hours a day, 7 days a week. If billions of people are asking questions, generating images, translating text, summarizing documents, that's a big problem. The challenge isn't teaching AI once. The challenge is serving billions of prompts every single day. That's where economics start to matter more than performance. And this leads us to the $40,000 problem. Take a high-end NVIDIA AI GPU. These chips can cost tens of thousands of dollars each. They are engineering marvels. But now you ask yourself something. Do I really need that level of power every time somebody asks me a simple question like, what's the weather today? Can you summarize this email for me or translate this paragraph? Probably not. Those are relatively simple tasks. Yet, if you're using expensive power-hungry hardware to answer billions of simple requests, the operational costs become enormous. You're spending more money on hardware, more money on electricity, cooling, more money on data centers. A good analogy is it's like delivering pizza in a Formula One car. Sure, it works, but it's ridiculously expensive to get that small job done. And that's exactly why the largest technology companies are moving towards custom silicon. And this is what brings us to Broadcom, because designing AI chips is incredibly difficult. Google, Meta, Microsoft don't just wake up one morning and decide to build their own processors. They need a partner. And increasingly, that partner is Broadcom. That's why Broadcom's custom AI business is growing so quickly and why investors are paying very close attention to what's happening next. What I find really interesting about Broadcom as an investor is that they have built what I call a double safety net. Most AI investments depend on a single outcome of being right, but Broadcom has positioned itself to benefit from two different futures. The first future is that Nvidia remains the undisputed king of AI. The second future is about a world where the biggest tech companies decide to build their own custom AI chips. We're already seeing that happen. What's fascinating about Broadcom is that they potentially win in both these scenarios. Let me explain how. Imagine Nvidia remains completely dominant for the next decade. In that world, AI data centers keep buying thousands and thousands of Nvidia GPUs. Sounds great for Nvidia, but also for Broadcom, because those GPUs don't work alone. When you're training a large AI model, every single GPU needs to communicate with other GPUs at incredible speeds because they need to be in sync. The bigger the AI cluster, the more networking infrastructure it needs. Think of it like a city. Adding more houses doesn't just increase demand for the houses, it increases demand for roads, bridges, highways, infrastructure that connects those utilities to these houses. So in AI infrastructure, Broadcom provides those digital highways. So when NVIDIA sells more GPUs, Broadcom gets to sell more networking technology that connects them together. So that's the first safety net. Now let's look at the second outcome. This is where companies like Google, Meta, Amazon, Microsoft decide they don't really want to rely completely on NVIDIA forever. And so they decide to build their own custom silicon. And a custom AI chip can be optimized for a company's own applications, data centers, software ecosystem. And that's exactly where Broadcom has developed their expertise. They are one of the leading partners helping companies design these specialized chips. So if the industry gradually shifts from buying generic GPUs towards building custom AI processors, Broadcom gets to participate in that growth. This is what makes this investment thesis so compelling. But wait, there's a third angle to this equation as well, the VMware acquisition. When investors hear the word AI, they often think of a fast-growing but a volatile kind of a business. Broadcom is different. Beneath all of the AI excitement sits a massive software business generating recurring revenue. That recurring software income acts almost like a financial shock absorber. AI spending can fluctuate, companies can delay projects, data center investments can slow temporarily, but recurring software revenue tends to be much steadier. And that's important because it gives Broadcom a stable cash flow so that it can continue investing into the AI opportunities, and it's immense. So, what does this mean for NVIDIA? Is NVIDIA in trouble? Not at all. NVIDIA remains extraordinarily powerful. In fact, they still possess two major advantages that make them extremely difficult to challenge. The first is the speed at which they innovate. The second one is their software. Once a company starts using the software, they're on their ecosystem. It's very difficult to get out of it. Nvidia executes at an exceptional pace. Any other company doesn't stand a chance against Nvidia. They never stand still. They release new architectures, new generation of products at a relentless pace. So this is the challenge for competitors. Imagine spending years of developing a chip that finally makes Nvidia's current offering. By the time you get there, Nvidia has already launched the next generation. The finish line keeps moving and moving and moving again. This creates a cycle that's incredibly hard to break. Competitors aren't just trying to catch up to Nvidia, they're trying to catch a target that's constantly accelerating. So that's a huge advantage. The second advantage is something that's even more powerful: software, especially the CUDA ecosystem. Millions of developers already know how to build applications using NVIDIA's tools. And so the entire AI workflows, which have been optimized around that software stack, switching away isn't about just buying a different chip. It's rewriting the entire code, retraining your teams, building existing processes. That's expensive, that's time consuming, and that's exactly why software creates that durable moat. So how should investors think about all of this? Personally, I don't think this battle between which company wins, which company loses. I think that's the wrong framework. Instead, I view Nvidia and Broadcom as different ways to participate in the same AI infrastructure build out. Nvidia represents the leading AI platform, and that's the company which is driving performance, innovation, software adoption, whereas Broadcom represents the infrastructure layer surrounding that growth, the networking, custom silicon opportunity, and the software cash flows from VMware. So the key takeaway is Broadcom doesn't need Nvidia to fail. It simply needs AI infrastructure spending to continue expanding. And if AI keeps growing over the next decade, Broadcom has positioned itself to participate in multiple ways. That's my opinion. And that's what makes this story so interesting and compelling. Sometimes the biggest opportunities aren't just the companies creating the technology. There are companies quietly enabling the entire ecosystem. NVIDIA is building the brains of an AI era. Broadcom is helping build the nervous system that connects the entire technologies together. And finally, if you enjoyed this deep dive and want more investor-focused analysis on AI, semiconductors, technology, and long-term growth wealth creation, make sure to hit that subscribe and like button. And if there are other companies that you would like me to break down in this level of detail, let me know in the comments below. Thank you so much for watching this, and I'll see you in the next one.